Everything is sticked.
I think so. Yeah, it's all working. So can I talk? Is the mic on?
Yeah, you can talk.
Good afternoon, everyone. My apologies for the lateness of our start today. We had a few small technical problems, which I hope will not be repeated. I'd like to start off by talking about the Wall Street, about the stock exchange in America. So what you've got on your screen right now is, of course, the JSE overall index. So let's go to the SPX. Okay, so the reason that we study Wall Street so closely is because all the markets, the stock markets of the world, follow Wall Street. If Wall Street's going down, everybody else is going down as well. So right at the moment, as you know, Wall Street has been in a long-term bull trend, and that we are in the throes of a correction, which began at the end of January this year. And here you can see that correction. There's the record high on Wall Street, 28.72. There's the 10% correction. And then for the last 4 months or so, we've been moving sideways. And you can see that there's clear support here, 25.81 on the S&P 500, and clear resistance up here at 27.86. So we just touched that. We've just bounced off that resistance. That resistance, by the way, is the top of this green candle, which you see here. So that shows you that 27.86. And it's just under 100 points below the record high. And we just bounced off it and fallen back yesterday from that resistance level. So now, of course, it remains to be seen whether we will penetrate that or not. Now, why has Wall Street been going up over this period here? The reason is mainly that they've got a record low unemployment level in America, about 3.9%. It's the lowest since the year 2000. So it's quite spectacular, really. The American economy has been generating roughly 207,000 jobs each month for most of this year. And that means that economy is really flying down the track. It is moving at a huge pace, and it's an enormous economy. And they are generating a lot of jobs. And of course, those jobs mean that people are spending more money. They're buying not only American products, they're buying imported products as well. And the whole American economy is really flying down the track, and you're starting to see that reflected in the S&P 500. Now, of course, the key is whether it will break up through that resistance at 27.86. I'm pretty sure it will. It might take a week or two to do that. And then shortly after that, it should go up and look at this record high here at 28.72. Break through that record high, and then we can say that the long-term bull trend, which I'll put on the screen for you now, is this long-term bull trend really, wait a minute, got to go all the way back there where I say bull market begins, right? From that date there, back in March or February even, March of 2009. So this is the long-term bull trend. You see it here on the screen. And what we are looking at is the third correction in that long-term bull trend. And I'm showing it to you here on the screen now. So that's the position of Wall Street. I'm expecting it to break up through this resistance, and then shortly after that, possibly within a month or two, to break up through this record high here at 28.72, and that will see the bull trend resume in America. And of course, our market and all the markets around the world will tend to follow that up. Okay, so that's Wall Street, and it's quite an interesting situation. It's having a big impact on our market as well. So let's come to South Africa and see what's happening here. Well, of course, the key in South Africa always is the strength of the rand. So I'm going to go and have a look at that. I think, yeah, there's the rand. Is it the rand? I don't think so. Let me try that again. I can't seem to get the rand. Let me change to a place where I have got the rand so that you can see what I'm talking about. Right, so this is now, we're now looking at the rand here. I'm going to maximize that. I'm going to put 5 years on the screen, and here you can see the downward channel in the rand, and that shows you how the rand has been in this channel since Pravin Gordhan was appointed at the end of at the end of of 2016, the beginning of 2017. At the beginning of 2016 he was appointed, and obviously that initiated a strengthening pattern in the rand, which you can see here, strengthening between an upper and lower channel line, and that has been constant since that time, the beginning of 2016. Here you can see the ANC's elective conference. At first there was considerable uncertainty, which caused the rand to weaken to touch this upper channel line, and once Ramaphosa was appointed, of course, the rand strengthened all the way back down to 11.50 Rand or thereabouts, and since then it's been weakening. But this weakness here is really more a function of the American economy. So the American economy has moved, or the international investment community has moved from being risk off to being risk on. So that means that they are scared for some reason in the international community. That means that they pull money out of emerging markets and take it to the US economy, where they invest it usually in the US Treasury bill, which is supposed to be the most secure investment in the world. The US T-bill, the 10-year T-bill in America, has recently touched 3%, and that of course makes it more attractive relative to our rand. Now the thing is that this weakness that's occurred in the rand here is a weakness which is also matched by other emerging market currencies. For example, the Brazilian real has weakened by 13% in the last month. That compares with the rand, which is weakened by about 9.5%. And you can compare that also with, for example, the Mexican peso, which is weakened by about 14% against the US dollar. So those two currencies, the Brazilian real and the Mexican peso, have actually weakened further than the rand. The rand is one of the stronger emerging market currencies. But that's not of great comfort to us that live here, because obviously the effects of this weakening rand are that basically that our petrol price will go up. So it's not good for inflation here in this country. We are expecting that rand to continue to weaken until it touches this upper channel line. So it could weaken as far as 13.70 Rand in my view, before it starts to strengthen again. And that would obviously mean further petrol price hikes depending on what happens to the oil price in the meantime. Also, you mustn't forget that this weakening rand is not bad for everybody. For example, it's very good for our mining industry, who can get more and more rands for their production overseas. So that benefits the gold and platinum industries and all the people in that mining industry. So those are some of the important factors that have occurred in the last couple of weeks. Of course, we've also had the news about the economy, where our GDP growth was a negative 2.2% in the first quarter. This was a very unexpected and unfortunate development. It's mainly linked to agricultural production. The agricultural production in the first quarter was much lower than it was in the first quarter of last year. So last year we had a bumper first quarter for agriculture. This year, not such a great quarter, but still good, but not as good as last year. So that caused a downward movement there. And most of that 2.2% comes from that. So it doesn't actually mean that the economy has gone into a tailspin. It's more of what they call a basic influence. From the base last year, the move now is not as great. So that causes the whole thing to come off. Growth this year is expected to average 1.7% over the whole year. So that was just the one quarter that was minus 2.2, but the whole year is expected to average 1.7%, and the Reserve Bank has come out and said that they still expect that 1.7%, which means that they're expecting the remaining 3 quarters to be very strong indeed, probably well above 2%. And that is a good thing. I mean, that obviously means that our economy is now growing at a rate of about 2% or higher, and but we're having to compensate for that first negative quarter. While we're still on the subject of our economy, I'd like to just point out that an important development has taken place in Eskom. As you probably are aware, trade unions in this country have been dominant for many years. They've been dominant, and that means that we have had basically reached a position where our economy is used to pay increases all the time. So if you worked, especially if you worked for the civil service, but if you worked for any big company, the union movement would motivate to get you a pay increase that was at least the inflation rate, if not better. And since Eskom has had a new board of directors led by Hadebe, and Hadebe is the CEO there, he has started to put things right. And he wants to run Eskom at a profit, and he's saying they can have no price increases there. They can have no wage increases until the company is profitable. So he's offering the unions nothing, 0%, which basically means that he's setting up a confrontation between the union movement in South Africa and the government. And it will be very interesting to see how that conflict plays out. At this stage, Hadebe is rock solid. He is not moving an inch. But of course, he does need to get political support for his position. And if he's successful, if he gets the unions to come back to work without a pay increase this year, that will mean a massive change in South Africa. It will create a new standard which other unions will have to follow, and which the government, in its wage negotiations with the public service sector, will also have to pay attention to. It could be a really big change in South Africa. All right, now there's a couple of shares I just want to draw your attention to this afternoon, if I may. I know that I started late, so we're a little bit short of time, but I first want to just have a look at a company called Montauk. Montauk is MNK, that's the symbol for it. This is a little company that I added to the winning shares list at 23 Rand back in July last year. So a year ago, I added this company to the winning shares list where you see that arrow there, that blue arrow. Now, this company is involved in extracting methane from landfill sites. In other words, rubbish dumps. Basically, they obtain the methane gas that comes off these landfill sites, and then they use it to produce energy. And over the last year, this share has done extremely well. As you can see now, if I go over here, you can see it's trading for 96 Rand, for over 96 Rand, and I put it on the winning shares list at 23 Rand. So it's gone up 320% in 1 year, and that's a pretty good return. It's an overseas company, so the local company is listed on the JSE, but it actually is a company that comes from Pittsburgh in America, and they developed this technology there. And obviously, it's got a huge application in South Africa. There are many landfill sites in this country, and there's a huge amount of methane to be gathered. So the share has gone up very, very strongly. If you had bought it last year in July, looking at the winning shares list, this is where you would be now. The second share that I'm interested in talking about today is a company called Resilient. Resilient is a property real estate investment trust, or REIT. They call that a REIT. And this company was the darling of the JSE. As you can see back here, it was trading for 151 Rand a share. That's just a little while ago. At the end of last year, it was trading for 151 Rand a share. And it's actually a group of companies. There are 4 companies in the group. So there's Resilient itself, then Green Bay, Fortress, and Nepi Rockcastle. Now, all these 4 companies are listed on the JSE as real estate investment trusts, and they were all very highly regarded. And the shares were trading at fantastic multiples. And then an asset management company called 361 Asset Management came out with a negative research report, and they accused this group of 4 companies of buying and selling each other's shares in order to promote or push the share prices higher. That report, as you can see from the chart here, caused the share price to drop from 151 Rand all the way down to this bottom point here at about 50 Rand. And as you can see, resistance was clear at 68 Rand 71 cents, and the share collapsed. Now it's been bouncing around this level for some time, and now you can see here now that it's trading for 59 Rand. And what I want to draw your attention to is how you deal with a situation like this as a private investor. The best technique is to use what we call a 65-day exponentially smooth moving average. You just put that on the share and wait for the share to break up through that exponential moving average, which you see here highlighted on your screen. So you can see now that we're getting to a point where Resilient is very close to its 65-day exponential moving average. And at some point in the future, there's going to be an upside break, in my opinion. You can see that the moving average is now at 65 Rand, and the share is trading for 59 Rand. So there's a gap of about 6 Rand a share there. I believe that this share will break through its 65-day exponentially smooth moving average very soon. And when it does, you need to be thinking about buying into this company, because you're buying really top-class assets for less than half of what they were trading for just 6 months ago in December last year. And that could be a very good opportunity. And remember, this is a property company, so its assets are solid as rocks. They are actual retail centers in Europe mostly, and they've got a huge operation here in South Africa as well. So you're talking about something that's got a lot of real assets. So it's not like Steinhoff or one of these other companies that has collapsed. This is a share that will recover. It's really a question only of when it will recover. The beauty of the 65-day exponentially smooth moving average is that it gives the marketplace a time to digest and absorb what has happened to this group of companies. And then eventually, when everything is out in the public eye, then those investment analysts at the big institutions will decide that this company is actually reasonably priced, and they'll start buying it up again. And it wouldn't surprise me over the years to come if this share didn't go all the way back to 151 Rand and maybe even higher. So those are the 2 shares that I wanted to talk about today. And that basically concludes my webinar. I apologize once again for the technical difficulties we had at the start, and I hope that you benefited from this webinar. Thank you very much, and I'll talk to you again soon.